We have a major catalyst coming here in after hours for AMC, GameStop, and other quote-unquote retail stocks that you guys must know about. Now, this is going to dramatically move these stocks, whether it is up or down. I have my own opinion on what I think is going to happen, and I still think this week is going to be ultra bullish. And if there was a time to get in and to make a trade based off of the executive order, literally the time is now. You might not see another 8.5% down day on AMC stock throughout the rest of this week, if not next week. So we have a lot to get into. We had some Fed speakers, some other things come out that we definitely need to talk about as well. So hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want access to all of my trades in real time, link down below in the pinned comment as well. But let's dive into it. So AMC stock, like I said, down about 8.5%. And what is the big catalyst for today? Well, it is going to be GameStop earnings. Now, why is this so important? Well, because a lot of your quote-unquote retail stocks are down dramatically today. AMC down almost 9%, Redbox down, last I checked, was like 13%. GameStop down 3%. That one's been ultra volatile today, as you would expect them having earnings in after hours. It's going to be ultra volatile. But when everyone is essentially betting against a stock, and you can see all of the put activity here, it usually goes the opposite direction, right? Like when the markets were just down 30% on the NASDAQ, 20% intraday on the S&P, people kind of reevaluate why they're so bearish, or potentially, what the actual news or catalyst was that made them bearish in the first place. And the lower you are, or the more fear, I should say, heading into a potentially bullish or bearish catalyst like earnings, it tends to have the adverse reaction. For an example, if GameStop was up, say 10 or 20% today, well, I would probably be saying the stock will more than likely fall after earnings. Now, obviously, I'm not a fortune teller. It might fall. They might not have anything good to say. They might have terrible numbers. They're losing a bunch of money. Shit, they could announce they're going bankrupt, right? I'm not a fortune teller. I don't know Ryan Cohen. I don't know what they're doing, but I do know they have been buying a lot of shares. And usually when you see a lot of buys, specifically for stocks that are not like super safe stocks, right? If you're seeing buys for like a Home Depot or some pharmaceutical company that's a very stable company, it doesn't mean all too much, right? They're probably doing it for the dividend yield, right? But when you're seeing insiders on this magnitude buying so many shares, it's a huge deal. The insider momentum on GME is at 88 on the Ortex scale here. Over the last 3 months, you have seen 16 transactions worth $10.75 million to the buy side. You have seen one sell for $92.88 thousand. So it is very clear that insiders are buying the dip on GameStop. They're obviously not selling out. Now, I would argue in this market environment, these guys know they can't pump up a stock because of insider buying, right? They're not going to buy into the stock, try to pump it up, and then essentially sell out. You haven't seen them sell out, and they're probably not going to, right? Ryan Cohen continues to add to his GameStop position as well, just buying 100,000 shares worth $10 million. For somebody to do that, even if you're rich, a billionaire like Ryan Cohen, you're not going to throw away $10 million just for fun, right? So obviously they might have something good to say, and I'm going to give them the benefit of the doubt here. If it's not the greatest, then the stock could still fall. But this is one of the most reliable indicators that I like to watch for, is insider buying, especially, a couple weeks or even a couple months before earnings, because like I said, they know the numbers that are currently coming out that are now going to be reported on earnings. So I think that's a little bit of bullishness you could add to the case for GameStop. But nonetheless, let's talk about AMC stock, because AMC is getting absolutely destroyed. Like I said, down about 9% now currently, and the markets are pretty flat overall. But there is this risk off stance today. And why is that? Well, it says the Fed's Mary Daly says rate hike should continue until inflation is tamed. And I think the markets are starting to really disagree with the Fed here, and they're really showing it in the high risk assets, the long duration assets, right? Like a lot of these stocks that we invest in that, you're shooting for the next Amazon or the next multi-hundred-billion-dollar company, 5-10 years down the line, a lot of those stocks are getting beaten down today quite dramatically. And that is because essentially I think the markets are disagreeing with the Fed, and they're saying, hey, you guys are raising rates, fighting inflation. That is all fine and dandy, but at the same time, you're going to kill all demand and you're going to push us into a very deep recession. So the last kind of stocks you want to own if you're heading into a deep recession are stocks that could potentially go bankrupt if the right market conditions started to play out, right? A lot of people don't even want to touch stocks that are unprofitable right now, and it's definitely showed in a lot of people's portfolios, even if they're great businesses. Just people don't want to touch them because of that risk for a recession. And it looks like, the Fed is just trying to get rates up so they can cut rates once a recession does come. That's the honest truth. They don't care about inflation right now. They really don't. They know food and energy, those are the biggest things that are affecting American families. They can't do anything about that. Core inflation has been falling 3 months in a row, likely another 4 months in a row once we get the next report coming out here in June. They know. They know. They just have to get rates up so they can cut rates once the markets do go into a recession. Once the economy does really slow down, then they can stimulate demand by raising rates. That's Econ 101. And I think the markets are definitely starting to price in the risk of the Fed stepping too far on the gas pedal now, or the brake, whatever terminology you want to use. She did say, quote, "We need to do that expeditiously, and I see a couple of 50 base point hikes immediately in the next couple of meetings to get there." And Fed Dally was very passive. She did not want to raise rates super aggressively until recently. And this to me, for somebody that has studied the Fed for so long, since, well, I shouldn't say for so long, a lot of people have been in the markets longer than me, but since 2018, during the whole, Fed Powell and Trump debacle, the Fed was raising rates, doing QE, QT, and the markets essentially crashed like 35%, and the Fed U-turned, right? This is how it plays out every single time. The Fed starts to talk like this. We need to expeditiously, raise rates and see a couple 50 basis point hikes immediately in the next couple of meetings to get there. You don't flip a switch in 3 or 4 months, or even 2 months for Fed Dally's case, from we don't have to do 50 base point rate hikes to we need to do them back to back to back to back. It's because they see growth slowing down, they see the economy slowing down, and the last thing you want is higher inflation than average, growth slowing down, basically going into recession, and rates low. Because what do you do from there? You can't cut rates, you can't stimulate demand at all. So basic Econ 101, and I think the markets are definitely getting spooked by the Fed at this point, rightfully so, because I mean they're spooking me too. It's going to be a really bad situation over the next couple of years, in my personal opinion, due to what they are currently doing right now. Nonetheless, it is very important to point out this is the first day of QT, quantitative tightening. So what the Fed is essentially doing now, starting today, is they are going to start to sell or let assets run off of their balance sheets. And you guys can see the U.S. 10-year yields are up about 0.08% today, almost 0.1%, which is a pretty big move in the bonds. And remember, bond yields go up when bond investors sell bonds. The rates are almost now back to 3%. So mortgage rates, all that, gonna continue to tick up. So if you were in the markets for a home, it's looking bad for the next at least the next year. But it says Fed report sees slight or modest economic growth as inflation surges. Most of the U.S. has been seeing just slight or modest economic growth over the past 2 months or so, according to the Fed's Beige Book. The report said most districts showed price increases rising at strongest or robust pace. The Fed is beginning its quantitative tightening program, which technically started Wednesday. So it's starting today. You've probably seen a lot of it priced in, but you are seeing a big sorry, I've been really sick recently, guys, so if I haven't posted many videos or done the live streams, that's why. But nonetheless, back on topic here. This is not good. This is not good for the overall state of the markets, but this is good for AMC and the potential margin calls that we could be seeing. The lower stocks go heading into a rally in AMC, that's going to put more and more pressure on that margin debt, right? Because if your stocks go up or down, you still have your same amount of margin debt. So if a hedge fund had $1 billion of margin debt to start the year and they have not paid that off or paid that down, well, stock values go down dramatically, and then your short position goes against you. You're in a really bad situation. So that's that. That's really what you guys need to know as far as big news. Now let's go over the Ortex data and look at the option activity. You're looking at 15 orders totaling $7.21 million, positive order value of 3%. So not so pretty right there, but I think there's just a lot of fear in the markets today. You wouldn't know that by just looking at the indexes because they're not down that much. The Dow down 0.32, S&P down 0.36, Nasdaq down 0.20, but you look under the surface and there's a lot of carnage out there. There is a lot of carnage out there. But nonetheless, look at that. The short interest of free float, 22.9%. Current shares that are sold short of 118.03 million. Cost to borrow max of 3.54%. Cost to borrow average of 10.11%. Cost to borrow max at 14.91%. 100% utilization. Days to cover at 3.41. Free float out on loan 34%. So it's remaining pretty stable across the board here, but you definitely are seeing that short interest continue to go up. Now at almost 23% is quite incredible and quite risky for a lot of these shorts in their short positions. So that is basically going to be all for this video. I don't know what's going to happen with GameStop earnings, honestly. If I did, I would let you guys know. But I do think if you are still bullish about this executive order like I am, today might be one of the last days to actually get into a trade. Now, on a more technical basis, you want to watch $13 per share. That's currently where we are at right now, right on $13 per share, to see if we can hold support there. If we hold support there by the end of the day, that would be a close down about 9.38%. If we can at least close there, that's going to be very, very bullish heading into the next couple of days, because that is the level that we were struggling to break out of for a little while, you know, over the past, call it just the month of May. It was pretty hard to stay above 13 for any, you know, period of time, really. We went above multiple times, but we always struggled to close above that. So that would be the main level I would watch for. RSI is now under the neutral level of 50. It's at 46.65, so no bueno there. But still, I mean, that's good for a potential move up. It means we have a lot of potential room to go to the upside before you'd get, you know, overbought, but definitely not so good right there. The MACD is still extremely bullish as well. We'll see what happens with all of this data coming tomorrow, but really in after hours you're going to see a pretty big move across the markets, at least in the retail sectors. So we have a lot of other information to dive into later on today. Stay tuned for that one, especially the video coming out at 4 p.m. That's going to be very, very important. But nonetheless, if you guys found value out of this video, hit that like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Thank you guys for tuning in. We will be live later on tonight with your regularly scheduled programming in between 10 and 11 p.m. Eastern Standard Time. We will be live, so come join us over there. Great place to be. Like I said, I've been sick over the whole weekend and really the first couple of days of this week, so it hasn't been a fun time, but we are back in the game, feeling a lot better now than I was. So that's that. If you guys want to come trade with me in real time, link down below in the pinned comment, and get your free stocks with Webull, Moomoo, and Public. Thank you guys for watching. I will see you in the next one.